Hello traders, it is Wednesday, August 20th, 2014. It's 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown of the overnight news. German PPI comes in at negative 0.8, expected at negative 0.7 year on year. BOE, the Bank of England, August minutes show a 7-2 split on rates. Looks like two voted for a 25 basis point hike. Both saw a need to hike before rise in earnings, as monetary policy is a lagging instrument. Most saw a need to wait for increase in CPI pressure. This affects the UK central bank interest rates. Everybody's watching the UK as the potential leader in raising interest rates. Reports that Israel may have targeted Hamas militant leader Mohammed Deif. In return, rockets were targeted at Tel Aviv yesterday, so there's a breakdown of the ceasefire there. I believe Netanyahu has been threatening a stronger military response, which so far is just hasn't gotten anywhere. Media focus on planned meeting between Putin and Poroshenko of the Ukraine next week. This was announced yesterday. That was the little pop we saw in the morning. Wall Street Journal cites Ukraine officials saying the meeting could lead towards a peace plan. Goldman Sachs upgraded Siemens to buy from neutral. Siemens is the largest, if not one of the largest components of the German DAX. An upgrade there. Microsoft's CEO Ballmer is leaving the board. He will be holding stock for the foreseeable future. And French president says the euro is still overvalued. Today, pretty light calendar. The only thing we have on deck left for today is crude oil inventories at negative 1.7 million barrels. That comes out at 9:30 Central. Again, crude oil negative 1.75 million barrels. Distillates negative 300,000, and gasoline negative 1.7 million. And then at 1 o'clock we have the FOMC minutes from the July 29th, 30th meeting. Let's take a look at what the market actually did yesterday. So the primary hypothesis yesterday in yesterday's video, as always, you can go back and watch those and see what was expected and why versus what happened. I think it's a strong educational tool there for you. It's all available for free on YouTube, youtube.com/FuturesTrader71. The expectation yesterday was the open out of range as we saw, chop, and then I expected the market to be stuck in this area, potentially go down to 67.25 and just to hang out there. Reason being is the high volume node from the entire month of July. I expect the market to just, given the fact that we have been just roaring up continuously, the market is roaring up, and I expected it to get stuck in this high volume area, but it did not do so. The other thing that I discussed yesterday is 79.75. 79.75 is the extreme on the other side of the this high volume zone in this micro composite. 79.75 is the other end of the extreme. And taking out 79.75 and continuing through to 82 gives us new highs with high probabilities. What I said, that was the second hypothesis, which ended up playing out. So let's run to yesterday. What happened yesterday here? Let's pull it back to the beginning. So if you follow these bars, you'll see that this is a clean open auction out of range, two-way action. There's no push in either direction. The market finally breaks through the opening swing low at 71.25 to 70.75. The expectation here was, okay, hypo one's about to unfold with a break into 69 and then finally 67.25 to chop around in here. Well, that turned out to be a head fake, and then immediately upon a 2-tick test of the opening swing low, buyers hop in and take it right up. And then essentially it just pulls back to the VWAP or the mid. So here's a mid pullback, and it continued higher to finish with a pretty weak top. But look at where it is, 79.75. That is exactly the location of that low volume node, as it's marked here with this peak low valley line, and on the micro composite 79.75, and it tagged it to the tick, but it fell off. Pretty good drop on that fall. So once it touched this key area 79.75, it just saw some pretty strong sellers the whole day as it's moving up. I posted a picture and a tweet of this. The whole day as it's moving up, the delta is not able to cross zero. It's moving up, but delta is just being hit all the way through. Look at how flat it is. So this looks like hedging against equities or hedging against underlying all throughout the day until we hit 79.75, and then you had the sell-off on the close, which again is the opposite of what we've had for the last week, but is in compliance with what we've had for the last 3 weeks. Very confusing. It seems like two-way action, continuous two-way action here. So this is where we are. This morning, on the open, the overnight high was put in right at the prior point of control. The market was not able to push through the prior point of control. It's showing some weakness. So as it opened, it fell off down to 73, retested the point of control from yesterday, and has been sitting right against the mid. Very, very balanced profile overnight. A nice run up on the on the European opening, and with the Goldman Sachs announcement on Siemens, the DAX had a small reaction in that, and then it's just been sitting here. To me, this looks more and more like a rest day, like we expected for yesterday. We did do a good job of testing 79.75. We left a pretty weak high up there. I don't like that high at all. Was not a fan of the low either, as I wrote on Twitter yesterday. But the high is fairly weak, and the overnight session is balanced below the close, yesterday's close. So there's plenty of energy here built up on the overnight session. So the expectation this morning is for a responsive buying test up into the close, 77.25, and into this which is also an LVN here at 76.75, and then I expect the market to give it a break and rest. We have not chopped in the areas we expected to be chopping, which was a 71.25 and 67.50 area. Just did not rest here at all. As you can see here on the composite, it just walked right through, which is always possible, but is not the norm. So maybe today is the day it takes a break. Okay, so that's how things are shaping up. Overall, the market's behaving very unusual way, in my opinion. It put in this bottom, and it just has been on a tear, even on the selling news on with the Ukraine attacking the Russian convoy. It just came back and it gapped up above that, leaving a weak structure below, and has been on a tear here. You can see it's just it warned last week, if you're short this market, you really need to think about buying calls or closing your position or something, because it certainly is coming in with vigor, especially with the delta reversing and buying close, as we saw last week here. the delta buying on the close. This started out last week, and it's been a continuous theme throughout the week until yesterday. So every day, the last 15-minute bar, the last couple of 15-minute bars have been buyers on the close until yesterday. Today is expected to be a rest day. I expect the range to be around, I don't know if we'll take out this week high today. We'll see. It's not far from here. It's only 5 points, so it's well within reach. But I expect the range to be around 79 down through to 67.50 today. We'll see how it goes. That's all I have for you for today. I guess I'll catch you tomorrow. And have a great day. Watch your risk. Take care.